A wonderful good morning, good afternoon, or good evening to you out there, and welcome to today's episode of That Crypto Show. My name is Dirk Hartig, and I have the pleasure of being two things. First of all, your host today on this episode of That Crypto Show. And second of all, I'm also the head of trading education here at primexpd.com. And as you know, 3 times a week we air this show to bring you nice and new content, trading education related content. And on today's show, we are trying to answer the holy grail of questions. What is the fair value of one Bitcoin in US dollar? So basically, if you have the answer to that question, you have unlocked the holy grail of investing, not only for Bitcoin, but as a matter of fact, for every asset, any asset that is out there. But being a cryptocurrency show, we are going to concentrate obviously on Bitcoin and try to answer that question. If you haven't done so already, please also remember to follow us on Twitter, px_academy. So you will always be up to date about everything we post up there, be it announcement for new shows coming out, new trading education related content, or even some opinions about where the price for cryptocurrency might be heading. You can also get in touch with us on the academy at primexpd.com if you like to drop us an email, or you can ask your questions here if you're watching live on either YouTube or Twitch using the chat functionality, or leave a comment when we later upload this video to YouTube, and to make sure we get in touch with you and are able to answer your question. And if your question is something that might be interested for a broader audience, we are of course going to cover that in this show in the future as well. Before we start, as always, I know this is the boring part, but as a serious company, we have to do this. Risk disclaimer, this webinar is brought to you and provided by the primexpd.com research team. We are professionals here. We put a lot of effort and expertise into doing research, but none of this is supposed to be financial advice. We are trying to teach you here to make your own well-informed trading decisions. So please, please, please always do also your own due diligence before investing into anything, not only cryptocurrencies. That, of course, is true for everything out there. All right. So is there a short answer to this? Of course not. Otherwise, we could just post it out there and we'd be happy we found the answer to this. So in order to find out what the fair value of one Bitcoin in US dollar or any other currency is, there are a lot of opinions about this. There are a lot of research material out there that you can dig through if you wish to do so and spend hundreds of hours with that. And also probably if you ask 10 different people about, hey, what do you think the fair value of one Bitcoin is currently, you're probably going to get 10 answers with a very broad spectrum of answers, ranging from I think it's worth $10 million per Bitcoin up to, or down to, in that case, as a matter of fact, to I think it's worthless and inevitably going back to zero. So where's the truth now? In order to do so, we are going to have a look today at one model called the stock to flow model for Bitcoin. This model was created by a user called PlanB. And this gentleman, PlanB, is somebody that likes to stay anonymous. So what we know about him, what is publicly available knowledge, as far as I know at least, is that he is a gentleman from the Netherlands, that he has a background in quant analysis, so quantitative analysis, statistical analysis. So he might be quite good with numbers and math and statistics, which of course always is good if you want to create a model forecasting the future. And he has been around with this model since end of March 2019, when he published this article, which you can find on Medium, which I highly also advise you to read through to really understand what the background of this model is, so you can make the decision for yourself. Is really this something I want to base maybe my investments, my long-term investments on, or is that just the newest, or in this case not so new, FOMO out there for Bitcoin? So what is that actually, the stock to flow? What PlanB tried to do back then here is trying to modeling a price for Bitcoin by comparing it to a price metric commonly used for other scarce commodities. And by scarce commodities, I'm talking about precious metals in this case, for example, gold, for example, silver. So the underlying hypothesis here is Bitcoin has a value because it's scarce, and it's scarce like gold, and it's scarce like silver. And in order to understand what scarcity is, he uses a definition here of Nick Szabo called unforgettable costliness. And I'm just going to quote from this for a start. Precious metals and collectibles. So collectibles, I assume he means something like old timers, maybe paintings of famous painters, and so on and so forth. So precious metals and collectibles have an unforgettable scarcity due to the costliness of their creation. This once provided money, the value of which was largely independent from any trusted third party. What does he mean by this? Money, and he's probably talking about the US dollar here, was once pegged to a precious metal named gold. So you were able in the past, until the Bretton Woods conference, until Nixon changed this whole thing, you were once able to take your US dollars, go to the central bank, and get gold for it. So it was pegged to gold. The money gained its value from gold. And this was changed to make fluctuating currency rates a bit more variable, and for other countries to be able to devalue their currency in order to get out of debt, and so on and so forth. Pretty complex, the whole background there. But he says, takeaway here that he says collectibles and especially precious metals have something called unforgettable scarcity, unforgettable costliness. And the underlying hypothesis now PlanB has here is that he says Bitcoin has also an unforgettable costliness because it costs a lot of electricity to produce new Bitcoins. And bear here in mind the recent discussion we've seen about the electricity consumption of Bitcoin, which is something the critics of Bitcoin always like to use as an argument. Oh my God, mining Bitcoin eats up so much energy. Bitcoin is using more energy than some countries, like I think the Netherlands actually was an example for that every year. So it's a huge waste of energy that is going on here to produce basically nothing. But he says, no, this is actually what gives Bitcoin value, because it consumes energy to be generated, apart from that it cannot be easily faked, and apart from the fact that it has a supply cap at 21 million Bitcoins, has a higher hash rate, and so on and so forth. And in my opinion, this actually is a valid point, although it's not so, maybe not so easy to see, and maybe doesn't pop into your eye very fast. Why is that so? So precious metals like gold also take a lot of energy to be produced. Actually, far more energy than the production, the creation of Bitcoin takes. Why is that so? In order to produce gold, you need the nuclear fusion that takes place inside a star. So in the beginning, you just had, after the Big Bang, you just had two elements actually, helium pardon me, hydrogen and helium. And a few 100 million years after the Big Bang, you had the first stars forming that were blazing away with nuclear fires. And those nuclear fires fused together those light elements, hydrogen and helium, into slightly more heavy elements, so carbon, nitrogen, oxygen, and you'll end up, if a star is big enough, with iron. So of course that still far away on the periodic table from gold, but if a star fuses iron, it cannot sustain the fusion anymore, and it basically explodes if it's big enough in a supernova. And during that supernova, when the star explodes, there's so much energy produced in a tiny fraction of time that it's enough energy to fuse the very heavy elements like gold. So basically, if you hold a bar of gold or maybe a nugget of gold in your hand, this is something that a long, long time ago, hundreds of millions of years ago, was produced in a supernova by an exploding star. I mean, take that in for a moment. That's also quite something, isn't it? Same goes for silver and other precious metals, by the way. So if you want, and this is a bit philosophical, I know that if you want to say so, actually precious metals are condensed energy, and the same goes for Bitcoin. Bitcoin has value according to this hypothesis because it's scarce. Yeah, it only has a limited supply cap of 21 million, and it takes a lot of energy to be produced. So what does that have to do with modeling a price now? What you can do now is you can compare the current amount of production for an asset and how long with the current amount of production it would take in order to produce the current stock. So let's make an example here. We at the moment have a current stock of around about 18.77 million Bitcoin out of 21 million Bitcoins that are already in existence. Now, at the moment, every 10 minutes, there are 6.25 Bitcoins produced, mined. Roughly every 10 minutes, a new block is generated by Bitcoin miners, and whoever finds the solution for the mathematical underlying problem gets rewarded 6.25 Bitcoins. And it would, at the moment, take around about 53 years to produce, with this reward of 6.25 Bitcoins every 10 minutes, the current stock of 18.77 million Bitcoins. So the current stock to flow ratio of Bitcoin is 53.9. And you can compare this stock to flow ratio with other precious metals, like, for example, gold and silver. And you can then fit by linear regression how the Bitcoin price at which stock to flow price, what Bitcoin price should be reached. And what he found out when he put the scarcity into a market value is that it fits the curve very, very good. And this is without any manipulation. Actually, so good that the likelihood that there is no relationship between market value and stock to flow is really close to zero. And he plotted, then he took the past prices for Bitcoin and assumed, like with a rising stock to flow. By the way, why is there a rising stock to flow in Bitcoin? If there are always 6.25 Bitcoins produced every 10 minutes, the stock to flow should actually stay the same or just rise very, very slightly with the Bitcoin production or the total amount of Bitcoin in circulation approaching 21 million. But that is not the case, because every 4 years we have something called halvings in Bitcoin. So when Bitcoin originally, the Genesis block, so to say, the first block in Bitcoin was mined until 2012, we had a block reward of 50 Bitcoins. So around about every 10 minutes, 50 Bitcoins were generated. This dropped in 2012 to 25, 2016 to 12 and a half, and last year in May to 6.25. So roughly every, I think it's 210,000 blocks or 4 years, you have in the code of Bitcoin this halving events, which cuts the reward, the miner reward to whoever finds a new block every 10 minutes in half. So of course, like when you have 50 Bitcoins being mined every 10 minutes, the stock to flow ratio will be much lower. So it will take less time to produce 18.77 billion Bitcoins. When you have only 6.25 Bitcoins produced every 10 minutes, it will take longer to produce a stock of 18.77 million Bitcoins. In 2024, this will, by the way, be cut in half again to 3.125 Bitcoins then. So this is something that takes place every 4 years until this number in the distant future, I think it's probably going to be 2133, 2140, around that area, will reach zero or close to zero. So taking this into consideration, he plotted this blue line, which according to his model shows where the price of Bitcoin roughly should always be. And so you have this blue line, which is the projection of where the price should be. And you have this, let's say, rainbow colored line here, which always shows the daily prices of Bitcoin. Now, bear in mind, in the beginning of Bitcoin, it was really difficult to determine prices because there was no stock exchange trading going on. And so it was kind of random where the prices were. You have all those fable tales from back there where somebody bought 2 pizzas worth, what was it, like $45 for 10,000 Bitcoins, worth now millions and millions and millions of dollars. And what you can really take away is here, if you compare the price, the daily closing price of Bitcoin to the projection line, the stock to flow, you can see it kind of always likes to oscillate around it. So it seems like this model actually is pretty good in predicting the price of Bitcoin. Not for every day, obviously, but the long-term price. And the interesting thing now is that it is projected by this model that the price here in early September should reach around 100,000 US dollars per Bitcoin. Now, as you can see, at the moment we are far away from this still. So at the moment we are at around about 38,000 US dollars. So there's still way to go. So if you believe in this model, you say like, hey, this guy has been quite good in projecting. Now, always bear in mind, of course, this is not an exact science. It is an exact science, but prices don't always behave like they are projected and forecasted by an exact science, by mathematics. So you'll have oscillations around here. You'll have phases where the price of Bitcoin goes below and far below also the supposedly fair price according to stock to flow, and you'll have times where it oscillates far above the fair price. But what you can see is no matter if it goes far above the current price, the fair price, or below the fair price, it has the tendency to always come back. So we could assume at the moment that if this model is true, that Bitcoin might still rise to around about 100,000 US dollars this year in order to catch up. And this is a little bit a make it or break it moment. Not a little bit. This is a make it or break it moment for this model, because this model would get invalidated if for the upcoming months, and I'm talking about a time frame here of 5, 6, 7 months, the price deviates largely from the fair value according to stock to flow. Why does the price actually deviate from this line? Like if we assume this is true, Why does the price not stick to this line? Like everybody knows about this, everybody thinks it's true maybe. Why doesn't it stick to this line? Because you always will have statistical outliers. And statistical outliers are something like Elon Musk twittering about that Bitcoin is dirty and Tesla is not going to accept Bitcoin anymore, which was retracted already. This is China banning Bitcoin mining in their country. This can be new taxation laws, new regulation, done everything that cannot actually be predicted by mathematics. So that will cause Bitcoin to either deviate to the upside of this model, or if it's bad news, to Bitcoin to deviate to the downside. Now, another thing you have to watch here is you'll see that these dots come in different colors. And this is so it marks how many days are left until the next mining. This event, and I'm sorry, until the next halving. So this price, this stock to flow, is mainly driven by the halving events. So that every 4 years, remember this graphic, the production of Bitcoin is cut in half. And in this chart, you can see, like, once it starts turning blue, you have like less than 200 days left until the next halving. And the halving event normally is the event that also likes to kick off a new growth spurt really in Bitcoin. And if you compare what happened here in 2012 after the halving, if you compare what happened in 2016 after the halving, if you also compare what happened up to now in 2020 after the halving until now, you see that you always had like a time frame, a period of really strongly rising Bitcoin prices. And bear in mind, this is a logarithmic chart because it ranges all the way from 1 cent up to, in this case, 1 million. And by the way, according to this model, after the next halving, so that would be in late 2025, the fair valuation of Bitcoin would be at 1 million US dollars per Bitcoin. Now, that's quite something, isn't it? Now, is this a break it or make it moment for this model at the moment? Because if Bitcoin maybe even declines down again to 20,000 or 10,000 and then goes sideways for months and months and months, or maybe even goes down, of course, this model would be invalidated. But it has gained some traction really over the last 2 years, was even covered by some really reputable news outlets, by some reputable banks out there. So it has given the underlying mathematics of that model really some credibility. And I personally always like to use this model when I cannot, when I need to get a broader perspective again on where Bitcoin is heading. So the typical days where you might have 3, 4, 5 days of red candles, where you're like, oh, I don't know, is Bitcoin going to continue? Are we going to crash? You know, all those doubts that you naturally always have as a trader at certain points. When you start doubting that cryptocurrencies are valid, when you basically start doubting the world and your own experience and your own ability to be a successful trader, I like to use this model to zoom out and think like, hey, okay, this model is still working. Prices can deviate to the upside, prices can deviate to the downside. But if I'm following the blue line roughly with my trading activity, I'm probably going to be on the safe side long term. Now, there are, of course, a lot of other models out there that try to do the same things with different approaches, and some of those models we are going to cover here also in the future. But we thought it might be wise to start with what we call the most famous, or the model that has gotten the most attention, positive as of negative. And I think you really have to give this gentleman PlanB here that he has stuck to this model really throughout the last 2.5 years. And he has been proving right over and over again. And remember last year, after COVID hit, when Bitcoin dropped here all the way down to 6,000. Everybody said like this model has been invalidated now. It could not take something like COVID into consideration. And well, guess what? It was rising from the ashes. So maybe that's going to happen now again. Maybe we're going to see an upswing, which will lead us to this area of 100,000. Only time will tell, but for sure it's going to be a very, very interesting second half of the year. So the next 4 months, without a doubt, are going to be one of the most interesting times as a Bitcoin trader, as a trader for cryptocurrencies. And I'm very, very happy to be able to accompany you through this time and see where the price will lead us. All right, that's all for today. Remember to drop us an email if you have any more questions at academy@primexpt.com. If you are watching on YouTube, leave us a comment. What is your opinion on the stock to flow model? Is it all just FOMO? Has it been invalidated? Or is it, in your opinion, still usable to predict the future price of Bitcoin? Until then, have a great day. See you again tomorrow at 10 a.m. CET. And always remember to use a stop loss and use a take profit. Take care and bye bye.